Hi, Danny from the Field Group, here to talk about the advantages and disadvantages of being a sole trader. So a sole trader is the simplest form of business structure and is relatively easy and inexpensive to set up. As a sole trader, you're legally responsible for all aspects of the business, and you can generally make all the decisions on the business's assets and trading, and can also employ people. So common examples of what may be a sole trader are startup businesses. So it might be one that you're doing on the side away from your usual work, or one that you may be operating from home. It could be a contractor such as a subby or a gardener, or sometimes some professionals need to be a sole trader for legal reasons such as a medical practitioner. What are some of the advantages of being a sole trader? Well, the first one is they're simple, so it's quite easy to set up and cheap. Control is often a big advantage because you get to control all the assets and all the decisions in the business. Financial reporting, there's fewer requirements, no dealing with ASIC, which is often a good thing. Another advantage is the ability to offset any initial losses during the trading against your other income, might be from other wages or investment income, creating a better tax situation for yourself. Only need one TFN, so everyone's got a tax file number. That's all you need to be able to lodge a tax return as a sole trader. As mentioned before, you can employ other people, but you can't employ yourself. So there's no legal requirement to pay super or work cover for yourself. And the last advantage is if your business is going really well and you want to restructure, it's quite easy to restructure from a sole trader to another structure. Brings us to the disadvantages. So the main disadvantage is the unlimited liability. So the sole trader is exposing all their assets that they own personally, and those assets are at risk, and that's unlimited. Another disadvantage would be tax planning. If the business is making good profits, there's an inability to share that profit with anyone else because it's only you, and you've got to pay all the tax yourself on that. A couple of other factors that come into play are that if you want a business name that isn't your name, you need to register that with ASIC. It's a one-off thing, and you need to link that to your ABN. Taxes, GST, 75,000 threshold. So if you're going to turn over more than that, you need to register. If you're under, you can choose to register, or you can opt out and have no GST registration. Income tax, you just lodge at the end of the year as part of your normal tax process, and pay tax at marginal rates on your profits. Once you're in the system, the ATO may put you on quarterly instalments so that you don't have that lump sum tax at the end of the year. Probably the last thing to talk about is in relation to that unlimited liability is insurance. You probably want to look at getting some sort of protection there for personal liability insurances, and it may be that you want some income protection given that you're not going to have any work cover. We hope that helps you. If you want to know any more, please get in touch.